Hello everyone, welcome back to our channel. Today we have an exciting topic to dive into.
All right, let's talk about something that drives every single trader crazy at some point. You know that feeling, that frustrating tug-of-war you get from your own charts? Well, if you've ever felt that, you are in exactly the right place. Today, we're going to solve it with one simple but really powerful concept.
So picture this, right? You're looking at your 15-minute chart, and boom, there it is, a perfect sell signal right at a resistance level. You're ready to pull the trigger. But then, you zoom out to the daily chart, and it is just screaming buy right off a major support zone. It's totally paralyzing, isn't it? That conflict, it leads to hesitation, it leads to bad trades, or sometimes just doing nothing at all. So who do you listen to?
Well, the good news is there's actually a super clear rule that just cuts right through all that noise. And it's not really a suggestion. It's more like a law of market physics. It's called the hierarchy of time. And trust me, this is the principle that's going to bring some serious order back to your charts and a ton of confidence to your decisions.
Okay, if you remember one thing from our chat today, let it be this right here. The higher the time frame, the stronger the level. Seriously, burn this into your brain. A level that took weeks to form on a daily chart just has so much more weight, more significance, and way more power than some little level that popped up over a few hours on a 15-minute chart. It's not even a fair fight.
To really get this, let's look at the forces behind these levels. I want you to think of it like a battle. On one side, you have this solid, concrete foundation, and on the other, you've got a dinky little speed bump.
And this slide just breaks it down perfectly. That daily support, that's our foundation. It's built by the big money, the institutions, over weeks, sometimes even months. It represents real, deep, structural conviction. Now, the 15-minute resistance, that's our speed bump. It's just short-term noise. It's a bunch of day traders taking a few quick profits. It's a temporary little obstacle, not a structural wall.
Let me put it another way. Imagine you're driving a massive freight truck, and that truck represents the power of that big daily trend. A little speed bump in the road isn't going to stop you, is it? No way. You might feel a little jolt, you might slow down for a split second, but your momentum is just going to carry you right over it. Well, the market works the exact same way.
Okay, so we get the why. We understand the concept. Now, let's get into the how. This is your simple three-step playbook that you can use every single time you see this conflict on your charts. This is where we turn that knowledge into real action.
It's a really straightforward process. Number one, always zoom out first. Start your analysis on the daily or the weekly chart to find those major foundational zones. Step two, trust that anchor. If the price is sitting on that big, strong daily support, you have to give it priority. It's the boss. And finally, number three, you gotta reframe your thinking. That little 15-minute resistance level, it's not a wall. It's a potential breakout opportunity that's just waiting to get smashed through.
So what actually happens when the price, bouncing off our big daily foundation, finally slams into that little 15-minute speed bump? Well, this clash is pretty much inevitable, and it almost always ends in one of two ways. The first and, honestly, the most common outcome is something called absorption. The price pushes up to that 15-minute resistance, and it just pauses. It might hover there for a few candles, kind of looks like it's struggling, but what's really happening is that the massive buying pressure from that daily level is just soaking up or absorbing all the people trying to sell at that weaker level. And once those sellers run out of steam, poof, the price continues right on its upward journey.
Now, the second outcome is a little sneakier. We call it the fakeout. So the price hits that 15-minute level and it dips just a little bit. And this is a trap. It tricks impatient traders into thinking, oh, the resistance held, and they all start selling. But what they don't see is that the price is just getting a running start. It quickly finds its footing on the true floor, that big daily support, and then it just rockets upward, leaving all those trapped sellers in the dust.
So here's the crucial point, right? In both scenarios, whether it's absorption or a fakeout, the higher time frame wins. Every time. It's what dictates the true direction. That little 15-minute level was just a temporary distraction. It was noise getting in the way of the real story being told on the daily chart. Your job is to always listen to the real story.
And that really brings us to the key question you should be asking yourself from now on. The next time you see those conflicting signals, and believe me, you will, what are you going to focus on? Are you going to get sucked into the short-term noise of that little speed bump? Or are you going to place your trust in the strength and the power of the foundation? That choice, well, that makes all the difference.
இந்த வீடியோ உங்களுக்கு பிடிச்சிருந்ததுன்னா லைக் பண்ணுங்க, ஷேர் பண்ணுங்க, சப்ஸ்கிரைப் பண்ணுங்க. Thank you for watching.